American Business Review, featured on national television, is an industry platform where the spotlight seeks out and shines on the creators and innovators. Because of its commitment to promoting progress, this editorial series recognizes the law offices of Darren C. Blum. The world of business. It's never been more competitive, more challenging, more rewarding. Growth rates, interest rates, franchising, globalizing, staying private, going public, online, bottom line. The world of business. It's about having good ideas, good technology, and good information.
Hello, I'm Morley Safer. It's been said if you build a better mousetrap, the world will beat a path to your door. In modern business, that happens often. New ideas are constantly being generated either to meet consumer needs or create new consumer needs, as you'll see in this story.
Since the tech flop, a cloud has hung heavily over Wall Street. A countless number of investors have watched the deluge of falling stock prices. Even under the guidance of brokerage firms, many have lost fortunes, and not necessarily because of a muddy economy.
What we've seen happen is customers are taking their hard-earned savings. Many people are taking their 401ks after they've retired and rolling it over to the big brokerage firms. They expect them to take care of the money because they expect them to know them and to know their backgrounds and to know their risk tolerance. Instead, these brokers we've seen in the past few years, they've taken the hard-earned money and invested it into risky investments, such as the tech stocks. Sure, the market went down, but these investors expected the broker and the brokerage firm to protect their money by diversifying.
Al Huckstead was someone who thought he could trust his broker, but says he was misled.
Within 8 months, I lost about $4 million. Their recommendations were bad. They were horrible. The analysts just were all wrong.
Al is not alone. Millions of people have realized that their misfortune was more than a mistake. Because of this, arbitration lawyers at the Stock Fraud Law Center have been busy representing anguished investors.
If you have a stock portfolio and you've lost more than 25% and you have losses in excess of $100,000, you probably have a case that's worth pursuing based upon negligence. When you opened your account, you signed an agreement with the firm, and in there, in small print, was an arbitration clause, which is okay, because arbitration is quicker and less expensive than court. And you will ultimately have 3 arbitrators that will decide your case. And that decision is final and binding, and it's actually harder to appeal an arbitration decision than it is a court decision.
Huckstead is currently involved in a lawsuit and doubts whether he'd trust another brokerage firm with his money.
I look at firms very, very cautiously, and I would say that it'll take a lot before I trust a broker again. I would want to see a broker's recommendations. I would want more in writing.
Follow up with your broker. Do not expect the broker to be always looking at your account. You need to really take an active part in the investment of your money.
There's no doubt that the market has seen brighter days. And in this uncertain climate, shareholders are looking for a safe place to keep their money. With the law community on their side, investors may find the protection they need to weather the storm.
Thanks for joining us for a closer look inside the challenging world of business. This program will continue to explore the new ideas and developments inspired by the spirit of competition.
There are 2 things that make up a case: liability and damages. Liability just simply means that somebody other than the client is at fault for what happened. And in most securities cases, we're able to prove and establish, at minimum, negligence. That they were negligent in recommending too many stocks, in not having stop orders, in not diversifying an account, by possibly recommending margin when they shouldn't have, and for not properly supervising the account, where a manager never contacted the client. That's the liability aspect of it. Then you have damages, which is basically how much money did you lose. Now, there are lost profit cases where the account went up in value, and as it began to drop and the client voiced concerns and the broker and brokerage firm didn't get that person out in time, those lost profits are recoverable. The way our law firm handles these cases is with a team of professionals. We have 4 lawyers now. We have multiple paralegals. We have experts. We have ex-NESD staff personnel on our staff now. We review the claims. We prepare the claims. We litigate the cases. And if needed, we go to a final hearing and try the case in front of an arbitration panel. We have a settlement rate of over 90%. And that small percentage that go to a hearing, we have a very high winning percentage as well. To show how strong we believe in our clients and our cases, we handle these cases on a contingency fee, which means our law firm will not make 1 red cent unless we recover money for the client. If we recover money for the client, we get paid a percentage of that money as our attorney's fees. We only take probably 1 or 2 out of 10 cases that get presented to us. So if a person has a case and we agree to take it, more likely than not, we're going to be able to get money back for that customer at some point in time, and more likely than not, without even the need of going to a hearing. That's all we do here at the law firm, is represent investors against brokerage firms for their negligence and misconduct in losing people's money in their brokerage accounts.
Once again, American Business Review extends a special thanks to the companies and organizations that have risen to meet the challenges of today's competitive business arena. This has been a presentation of WJMK.